as well at about 64.5%. So just finger on the trigger, as it were. The Australian dollar was sold off heavily, as we know, overnight, and that was much more to do with, of course, what we've been digesting on the political front coming out of the United States with that clean sweep for Republicans. Here we have it, 6.2% confirmed on the unemployment rate, and the jobs build itself, 24,000. So pretty much as expected, a jobs build of 24,000. There's the Australian dollar, and you can see, if anything, it's it's going to be ticking higher on that. 6.2%, unchanged effectively from the revisions that we've got, and the job increases coming through. Looking at the breakdown on those as well, importantly, full-time employment, 33.4 thousand in the month. That's full-time. The part rate, 64.6, and that is a little that's a little above the expectation of 64.5. It's not a huge variation, but it's just a slight move off the consensus. But what's important is that that figure is pretty much Simon Boulton from Aequalis, who's with me. Simon, welcome to you. That's pretty much bang on the poll, which,
yeah, I think so.
Which has got to be said is a relief, at the very least, surely.
I think the last numbers that the ABS was releasing, there was a lot of hoo-ha around how it's calculated. And you and I have sat here questioning and wondering what they are. Hopefully this revision of a revision should now give us numbers that are, I think, closer to the mark. And certainly this first release following those changes seems to hit market expectation. And instead of throwing papers in the air, Carson, we're sort of nodding, thinking, yes, it's probably around where we expected it to be. And certainly that's reflecting the job market. We're seeing a steady demand for people. We're seeing people still being hired. You know, those hiring processes are more difficult, but certainly I think this marks a stabilising and perhaps even a reaching of the maximum unemployment rate.
Okay. What's interesting as well is the full-time component on this. 33,400 jobs, part-time, an erosion of 9,400. That is, again, going to lead to some questions, is it not? Only because we're not necessarily seeing from business surveys and private sector surveys any demonstrable determination to put money to work in any part of the business, let alone taking on a full-time suite of workers that these numbers say we have.
Well, I think partly of that part-time and permanent mix is that lots of part-time or temporary roles are being made permanent. That uncertainty when they were hired has perhaps firmed up a little bit, and that's where we're seeing that full-time build probably being in excess of the part-time build as we go through the rest of the year.
Aggregate hours worked, an increase of 24.9 million.
Yeah.
Again, is that consistent with a reorientation into full-time?
Not necessarily. I think that it's still that, and we've talked about it many times, more for less. Organisations still have that eye on the bottom line. Employees still have their eyes on the salary wages packets. So I think it's just that trend that we are seeing, that people do more now for the same. So no, I think there's nothing unexpected in there either.
Put it this way, from your clients, you talk about this move to maybe lock in as less uncertainty prevails. People who had been in the part-time space into full-time roles, are you seeing that noticeably on the specs that employers are putting forward to you, saying I want X, Y, Z, and top of that list is full-time?
Yeah, I think the job specs that we were seeing were quite often 12-month contract, 6-month contract, but the hiring managers there were often saying, it's probably a permanent job, Simon. Look, we'll call it a 12-month contract, but it will probably turn permanent. So I think that's probably what we're seeing now. And I think, is that getting any less? There's probably more permanent, words permanent on job descriptions than there have been. I think as this does firm up, organisations have gone through their transformations. Organisations have offshored where they're offshoring, and organisations now, I think, are putting into plan the strategies that were set around June, July of this year.
6.2% on the unemployment read. It had been revised up to that level by the ABS earlier this week. Yeah. So it's sort of net done, not much in the space of a month, right?
That'd be about right. I think that'd be the
reasonable assumption.
Consistent reason.
So inconsistent with what the RBA did, which was just to sort of to take a back seat and Yeah.
Yeah.
Have a Campari and move on.
Campari.
Yeah.
Things are going well there.
Well, they are if you're at the RBA table. You tend to they tend to feed and water you rather well.
Okay.
One suspects. No?
Let's hope so.
Yes.
I haven't been
Come
there.
on. There's got to be an incentive to be on that board, for goodness sake. What is it if it's not being fed and watered?
Case of VB, that's what I found.
Okay, Simon. Choose your poison. All right, there we have it. We'll come back to you in a minute. Let's go over, shall we, to our next guest as well, Warren Hogan, Chief Economist at ANZ. Whoa, lots of noise in the background for you, Warren. It's a busy office, but not much has changed in the last couple of months. If we look at the revision from ABS earlier this week on unemployment, what we've seen today, what surprised you the most?
Just the fact that there's still a weakening trend in the figures. I mean, even though we got some jobs growth in the numbers today as expected, that comes on the back of two very weak numbers that we were presented with on Tuesday in the newly revised numbers. And the unemployment rate, even though it's unchanged at 6.2, it's been rising for the last, well, quite a few years, but all year this year. So, we've got a question mark on the reliability of this data, and we're going to give the ABS the benefit of the doubt, and they're going to continue to work on it, I'm sure. But it is still telling a different story to all the other labour market indicators, whether it be the ANZ Job Ads series, which has got a long history and is pretty reliable on direction, or the NAB Business Survey, which has got some sub-survey components which have got very good relationships with employment. So that's what I think is the question there. The noise in the office wasn't the market reacting to this survey. The market is just not giving it any credibility at this stage.
Yeah, I was being slightly facetious, but yeah, I mean, you raised that and you made that distinction in a valid way. Warren, is there some sucker to take from this overweight push into full-time? Is that more consistent with some of the indicators you're seeing? You talked about that mismatch between ABS, the story it's telling, and what you're seeing and observing. Is that one factor that looks consistent?
Look, it's hard to say. I mean, I think the main point I would make about full-time versus part-time is that, for the last decade or more, people would say, well, we're creating part-time jobs, there's underemployed, it's not good. But let's just look at the changing economy out there. We've got a much more flexible workforce, we've got industries that have part-time employment, the definition's pretty broad. So, look, I'm not too concerned about that. The fact that we got solid full-time employment, I think, does tell you that all else being equal, that the economy and the cycle's lifting. But look, I wouldn't overplay that. I think it's a lot of the industries that are going to grow, whether it's in health and ageing, in retail and other service industries, the industries we need to create the jobs in the next 2 or 3 years, there's going to be a lot of part-time employment in it, and some good part-time jobs of 20, 30 hours a week.
What do you make of the call just a day or so now ago that market is underestimating the potential for this unemployment story to worsen and worsen quite significantly? In other words, with a potential 7 handle in front of it. Is that something you're preparing for, the eventuality on? Is it an outlier but still a possibility?
If the unemployment rate goes to 7% on the same basis that we've been looking at employment for the last decade or two, that is, it's not because the ABS changes the survey, then we've got a problem. Certainly the economic community of sort of mainstream forecasters in the private sector, the central bank and the Treasury aren't expecting 7. The markets are probably a little bit more closer there in the sense that the money markets aren't pricing in any meaningful upward movement in interest rates in Australia for a number of years. But still, I think if we got an unemployment rate heading to 7, there'd be a lot of talk of need for rate cuts, not just delaying rate hikes. So I think if you get an unemployment rate heading from what now 6.2 to 7, then that's a major issue for this economy and inconsistent with a non-mining recovery.
Warren, what would it have to print at for you to recast your calls? Because of course this was a Morgan Stanley call to credit that institution with the view that it's put out there. For you personally, what would the number need to escalate to for you to say we need some further easing from the RBA?
Sure, 7. 6.5 and going north, but I'm not sure what an American bank knows about the Australian economy that anyone else doesn't. So, look, the way we're reading it, we're getting a lift in the demand for credit. We're seeing forward indicators pointing to a stronger economy. So, I think the issue is whether or not the unemployment rate starts to turn and head towards 5. and then we'll debate what is full employment in Australia. And we got down to 3.9 or 4 pre-crisis, and that was too low. That was pushing wages up, pushing inflation up. So 5 looks like the right number. So I think 5 is a better thing to think about over the next few years than 7.
Okay, a brief thought on the dollar as well. 4-year lows, but can we sustain this depressed position, or you think the yield story pushes it back up as quickly as it fell down overnight?
Yeah, look, it's a really tricky one because we saw some dollar strength push us through some key levels, and then some stopping out, I suppose, was driving the Aussie even lower. So we're down through into new territory. We think that the Aussie dollar, to match up with domestic fundamentals, export prices, this sort of thing, should be around sort of 83 to 85. So if it goes down into that range, then that's probably that's fine. But there is still that yield story out there. The moves by the BOJ last Friday will eventually result in more buying of Aussie fixed income securities by Japanese investors. And until we start to see the turn in the US yield story, then I think there's going to be still this very strong search for yield in places like Australia. So I can't see the Aussie sort of sustaining the move down sort of sub 85 until US rates are going up, and that's probably not till Q2 next year.
That's very true. Thanking you as always, Warren. Appreciate it.
Thank you.
With his eye on all the numbers and the trends, Warren Hogan, their chief economist at ANZ. We're still continuing on with my guest in studio, Simon Boulton from Aequalis. We'll go back to him in a tick. For now, though, down to the dealing room at CMC Markets. And Rick Spooner, to you, looking at the patterns of market behaviour just pre-release, we've come off a slightly steeper decline, but again, we're looking at banks, unloved, the session. What's your greatest takeout in terms of job numbers today, market psychology alongside it?
Well, look, I think the Aussie dollar is the place to go for the really sensitive reaction to the jobs number. And broadly speaking, there's not a lot of change. The figure is close to expectations.
Yeah.
I think it, for my money, the changes the ABS has now made pass at least one reasonableness test. They've taken the sort of unbelievable volatility out of these markets and settled down to a fairly consistent pattern. Now, there is debate about whether they should be stronger, and as Warren Hogan was saying, many believe that figures like the ANZ job ad series and so forth suggest they should be a bit stronger. On the other hand, wages growth remains very subdued, and that's certainly consistent with a situation where there's plenty of capacity in the market. So whether the bottom line, as far as the Aussies is concerned, whether the truth lies with what the ABS is doing or the private surveys or somewhere in between, I think the safest way to look at it from a trader's perspective is that at this stage anyway, our employment market is somewhat behind the US one in terms of cycle. Now, it's true that the US has come from a much worse position than ours, but they're in an obvious now, and have been for a long time, position of downtrend in their unemployment rate. We're either got a little bit more to go in terms of getting higher or bottoming. That puts us behind the US at this stage in the rate tightening cycle, I think, and that means, I think, in the longer term, a weaker Aussie dollar.
Well, that would be welcomed by the Reserve Bank. Got to be said. In terms of what you might then see clients do differently, what would be the first instinctive play to kind of get ahead and anticipate that and to profit from it? What are the signals in the market that you're looking for there? That the market believes that dollar weakening story might well be the next chapter of direction?
Yeah, well, I think so. I mean, from a trader's perspective, the most obvious thing to do is to get involved with trading the Aussie dollar against the US or other currencies. It's in a clear downtrend, so depending on how you handle things, but a typical strategy for traders would be to sell into corrective rallies at this stage. Position points where you can get in with fairly close stops, looking for the next leg of the downtrend. That would be a traditional way to go. As far as the stock markets are concerned, well, the thing to do there, I think, is to look for companies that will be advantaged by this, and that's been an ongoing theme in markets now for quite a while. But, you know, those good quality stocks like Amcor, those sort of stocks that are going to benefit from a weaker Aussie dollar have already been getting quite a bit of advantage from this.
Rick, thanks as always. Appreciate the update.
No trouble, Carson.
Right. Rick Spooner from CMC Market Stockbroking. We will take a break. We continue our coverage on jobs. Simon Boulton's with us from Aequalis in just a minute.
There's a moment in time when everything falls into place, when the stars have aligned. With strictly limited numbers on the BMW 116i M Dynamic line from 39,900 drive away, the time is now.
Find the biggest names in business and the most comprehensive coverage every day in the Australian Business Review, the new home for the best in business. Exclusive to The Australian. Look into it now.
At NAB, we back businesses that back themselves. That's why we're committed to lending $1 billion a month. More yes for business, less missed opportunities. Australian business, see more, not less. NAB.
At AGL, we create energy solutions for every part of every day. With the AGL Move-In Guarantee, we promise your power will be on the day you move in. We'll also text you along the way. Call us 24/7 on 1300 245 668.
Anton's Animal Kingdom. Anton. How may I help you?
Help!
Be quiet.
Quiet!
Silence.
If only everything was as easy as creating your website with Wix. Go to Wix.com today. It's free.
If you're not in a financial position to live the lifestyle you deserve, ask yourself one simple question. Why? I'm Andrew Barnett, founding partner of LTG Gold Rock. And today, we want to give you free and direct access to watch us trade live. You'll get to see the investment strategy and tools we've developed that hundreds of Australians just like you are using to earn their way to financial independence without banks or fund managers.
At the moment, I'm really happy with the returns I'm getting with LTG Gold Rock. If you want to change your lifestyle, get onto LTG Gold Rock.
Register for LTG Gold Rock's exclusive offer today, and you'll receive free and direct access to our live online trading room. My team and I will trade live in front of you, so you can see in real time on a real account just how much money you could make by following our trades. You have the potential to live the life of your dreams. Go to dailytrade.com.au to register now.
On November 29, Victoria decides its future.
A better future we can all share.
With Victoria's most in-depth election coverage ever. Sky News will be live with all the major events and the key players. We introduce Victorian Agenda with unique insights to the campaign, together with Australia's most experienced political team.
It's the first state election since the federal budget, so Canberra prepares for some major federal fallout.
Victoria votes live and unrivaled on Sky News.
Welcome if you just joined us, and to repeat on the news of the half hour, we've seen a bounce in employment for the month of October, 24,100 net positions created. That keeps the jobless rate steady at 6.25%. Remembering it was 6.1 before the ABS scurried to revise its methodology and put out a fresh set of figures on Tuesday of this week. And that did see the September read rise from 6.1 to 6.2, which is where it stays at now in October. There are lingering concerns still over the reliability, though, of the new methodology. Reuters just talking in the last few moments to Michael Turner, the strategist at RBC Capital Markets, saying despite the ABS's best efforts to get this seasonal adjustment right, it'll be a while before faith can be restored. So the market hasn't really moved a lot on this, and we'll take it with a bag of salt, not just the grain. Stephen Walters as well, chief economist at JP Morgan, he's also been quoted saying, given all the noise we've had in the last 2 or 3 months, confusion around treatment of the seasonal numbers, it's a decent result, not particularly much of a surprise. I think what the ABS, he even says, has been saying sounds credible in terms of why they've had to go back to the future really on reviewing how the methodology works in a seasonal sense, the months that they were choosing to ask supplementary surveys, for instance, and what that might have done to skew results. So refashioning and reviewing some trends there. Simon Boulton from Aequalis, interesting to see, and thank you for staying on with us for this, as you look into the numbers here from the ABS's own release, just that east-west split. It's quite marked, really, to see a shift. You can see the absolute increases in employment, the largest coming out of New South Wales, 17,300. The largest decrease in Queensland, down 8,900. In fairness, though, WA is picking up some steam. It was there alongside NSW with a rise of 13,100. So explain that.
Well, I think that rebalancing of the economy and rebalancing of the employment skills, that does happen. It will happen slowly. This isn't going to be people queuing at Perth Airport to land at Kingsford Smith. You know, this is going to be a gradual, and also then moving on from the mining projects. These don't suddenly come to an end. These gradually, see people leave those projects and then need to find other work. And as the infrastructure and engineering and construction organisations here in Sydney continue to be busy, that's very much where these people are finding their new jobs.
It's a worrying split between New South Wales and Victoria. You've got 5.8% unemployment rate now in New South Wales, 6.8, so above the national average in Victoria. Still as well above the national average in Queensland, South Australia, and dare I say it, Tassie too. Walk me through that. In other words, there's more kind of above the national average than below it. To commentate about it at the moment.
Well, it's all of those individual ones obviously add or create the average, but those big anomalies there, it's difficult to know exactly what's going on. I don't think there's any particular job losses that are happening in one of those states versus another. I don't think there's rapid hiring in any one than the other. So it's hard to know what those state anomalies might be. So I don't think there's a...
So Victoria, though, just looking at the fact that its housing market now looks to have leapfrogged Sydney's in terms of price and the